So a couple days ago on the channel, we had a fun little thought experiment in which I told you all that I think that most people need to get up to 15 Solana. Now, of course, I told you the way I got to 15 Solana was by saying, okay, the general crypto investor wants to see their bag worth at least 5 figures, which is $10,000. And so because of that, I was like, okay, well, based off the fact that most people want it to be $10,000, what is my price prediction for Solana? And at that price of my price prediction, let's reverse engineer that back into deciding how much Solana that is. Turned out to be 15 Solana. And what I decided to do is that since you guys did enjoy that thought experiment so much, it was a cool way for me to blend in my price prediction with the fun little side of entertainment. I decided that we would do it for Bitcoin as well, because Bitcoin does, hold the vast majority of my portfolio, currently at about 56%. And so with that in mind, of course, today we're going to be talking about why I believe you need 0.0725 Bitcoin in order to reach that 5-figure milestone based off of my price prediction. And so with that in mind, of course, let's not waste any more time and let's get into the chart to figure out how we got that number. So as you look at the chart here, you're going to notice something. You're going to notice a lot of these little circles, and you're probably going to ask me, Tyler, what in the world are all of those circles? And what you'll come to realize is this is just about every single macro high that Bitcoin has ever put in. Now, you're going to say, okay, that's random. What does it have to do with anything? Well, what I came to realize is that there is a correlation between every single one of those circles. Something similar has happened with every single one of those circles. Now you might say, well, then that holds a little bit of weight. That might hold a little bit of weight because if there's something similar between every single high, every single macro high that Bitcoin has ever put in, maybe that can give us a little bit of intelligence or maybe a little bit of an ability to help predict what could happen next. Now, do you want to know what happened between each one of these circles? Every single time that we saw one of these circles interacted with, we saw a macro Fibonacci 1.272 to 1.618 extension on Bitcoin's price. Now, I know you're going to say, what does that mean? If you're new to the world of Fibonacci's, let me briefly explain. A Fibonacci is quite simply just levels and ranges in which you will likely see a certain crypto's price, let's use Bitcoin as an example, run into support or resistance. Now, there is a lot more that goes into it, and it is extremely technical, and it's actually mathematical in how they gauge what these levels are. But if you're brand new to Fibonacci, just keep it that simple. It's a range or a certain level in which you're the most likely to see a crypto run into support if it's going down towards it, or resistance if it's going up towards it. So for example, the ones that I use, the only Fibonacci ranges that I personally find valuable are currently, let's go ahead and just get my old trusty old brush back out here. Here we go. Is the 0.618 Fibonacci level, the 0.786, your 1, of course, being the level in which you draw your range from, which will make sense in a second. Your 0, of course. Then if we're going to go down, this is the, the end of the range, which again will make sense in a second. Then your 1.272 and your 1.618. These are the only ranges I really find valuable, and let me explain how it works. So how it works is, let's say hypothetically, a crypto's price does something like this. A crypto goes up, it hits a high, it comes all the way back down to set a low, and then it continues upwards, okay? It continues upwards. What you're gonna do is, in order to decide how far up that crypto is likely to retrace, again, it's a Fibonacci retracement, you have to draw in your Fibonacci. So what you're going to do is you're going to get your Fibonacci's and you're going to say, okay, let's draw this high all the way down to the low. So it's your range high down to your range low. Your range high being the 1 level and your range low being the 0 level, okay? And what's interesting about this is that generally speaking, these are the levels in which you're going to be able to predict where you're going to see some resistance. The price of this crypto in this example, let's go ahead and get rid of this and just draw this over again. The price for this crypto in this example is going to work its way up, maybe run into a little resistance here, and as it hits this 618 to 786 range, it's going to run into a ton of resistance. The likelihood of it getting rejected here is more likely than anywhere else within the area. Anywhere up here or anywhere down here. The 618 to 786 box is the most likely level to reject a crypto back in the opposite direction. But interestingly enough, if this crypto successfully surpasses this, maybe it looks something like this, what's the most likely to happen is it then is going to interact with its previous all-time high, right? Which of course is then going to be a determining factor of whether or not we're going to double top or not. And if it clears this all-time high, it is now on track to be extremely likely to reach 2 levels. The 1.272 Fibonacci level and the 1.618 Fibonacci level. Again, I'm not going to explain the mathematics behind it in this video. I want to make this quick, simple, and easy. So again, just keep in mind, this is how this works. The 1.272 to 1.618 Fibonacci zones are the ones that you're the most likely to go up towards once you pass your previous high. Your previous high is considered the range top, which is the 1 level. Let's just use that. Let's just stop there with the explanations. Okay, so what we're now going to do is we're going to go in and let's actually, before we do any of that, we're going to go in and just delete this and then delete that. There we go. Beautiful. What you'll notice is I'm not just making this up. Okay, I'm not just pulling this out of a hat like a rabbit, right? This is just what happens. Let me explain. So what we're going to do is we're going to draw in some Fibonacci's. Let's just draw in this Fibonacci first. What you can see here is that, of course, exactly what we said. It set the high, it set the low. It used that to go upwards. Once it did that, where'd it go? Cleared this 618 to 786 box. We, of course, then saw it clear the one level, the previous high, go through the 1.272, go through the 1.618, and then inevitably start to pull back to the downside right around that time. Now, if you look closely, where did we get stuck? It's interesting, right? Where did we get stuck? We didn't close above that 1.618 level. We got stuck at it. Okay, us getting stuck at it means that this is where true resistance was. True resistance was on this 1.618 Fibonacci level. What happened from there? We pulled back. Where did we pull back to before we saw consolidation? The 1.272 level. So we got stuck at the 1.618 level, came back down to the 1.272 level, then saw a pullback towards the 1 level, used the 1 level to hold support to then continue back to the upside. Where do we run into some resistance again? Where do we start to try to find this thing? Let me move this out the way. There we go. Where do we start to try to find some support again? Here and here, 1.618, 1.272. Interesting, right? Consistent interaction, extremely predictable, based solely off of this move. Interesting, right? Let's go forward, okay? Let's move into the next one. I'm not going to do all of them. I'm going to speed run through some of them, but let's do one more just so you can kind of see what some of these interactions are like on the smaller time frames. Then we'll look at some of the bigger ones. Looky here, guys. Looky here, and gals, of course. Looky here. What happened? We saw the push through the 618 to 786 box, through the 1 level, up to the 1.272 level, paused, cleared, worked its way up, failed to hold above the 1.618 level up here, failed to hold it, then lost, came back down to the 1.272, then came back down to the 1, up to the 1.272, up to the 1.618, got rejected, cleared it, back tested, held it as support, continued forward, came back down, 1.272, held it as support, continued upwards. Constant interaction. All simply based off of this. Now, or sorry, no, it was off of this right here. Okay, this little move. Now that you see that what I'm saying is true, off these two examples, which isn't enough, you need to go back test this yourself. Off of those two examples, let me just speed run you through some of them. Okay, I'm not going to just draw the lines out, but I just want to speed run you through it so you can see it. Okay, boom to boom, 1.272, 1.618. Boom to boom. 1.272, 1.618 to 1.272. Now let's go macro. Let's go macro a little bit, okay? Let's go from the top of this market all the way down. Let's do this. Top of the market all the way down to the bottom of the bear market. And then let's take that and just drag it on out. Let's just drag it on out just like that. What happened, guys? Based off of this interaction, this swing low, or swing high, sorry, all the way down to swing low right here. We cleared the 1.618 box. Where do we get rejected on the macros, guys? 1.618 to the 618 to 786 box, this area. This is where we got stuck. Cleared it, cleared it. Boom, 1.272, back test 1.272, up to 1.618, back to 1.272. Where do we go after that? Back to 1.618, back to 1.272, lose the 1.272, back to the 1, lose the 1, continue down right here to retest around the 618 to 786 box, never really touched it. Now we came back up, ran into some resistance. Where was resistance? 1.272. Where are we now looking to go up towards? 1.618. I'm not making this up. On smaller time frames it doesn't. In macro bull markets, 1.272 to 1.618. And if you look at every single, because I don't want to drag this out too much now. I know you're probably getting a little bored now. If you look at every single one of these circles, it's done the exact same thing. It's even done it recently. Let's look at this. Let's look at 2024. Boom. 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 Guys, I'm not making this shit up. Swing high to swing low. Where did we put this resistance at on February 15th of this year? Where are we getting stuck at? 1.272. It's just what Bitcoin does. These two Fibonacci levels are ridiculously strong. Ridiculously strong. They're magnets, but they're rejecting as well. Look where we're at. It just happened this week. I'm not making this up. It happens on the yearlies, happens on the monthlies, the weeklies, happens on the dailies. And as I mentioned before, if we were to zoom out, I circled every single major interaction that I saw that had this exact type of movement. And look at all these circles. All those circles represent times in which we did it. Now do you see what I mean? Now do you see what I mean? It's just what it does. So now you're saying, Tyler, okay, golly, we get it. Why? Why is that important? How does that give you a price prediction? Well, think about it. If every single time that we've made one of these highs, we've pulled back and continued upwards over the long term, we've gone up to the 1.272 to 1.618 box, that gives me a pretty reasonable reason to believe that this is what we're going to do again. Rather reasonable, right? Again, that's not my full thesis. There are fundamental reasons why I believe that Bitcoin is going to reach those things. Of course, we're talking about ETFs. Of course, we're talking about interest, inflation, presidential elections. We're talking about all that, but not today. We're talking pure technicals. Okay. Well, again, the number is 0.725. Why is that important? Well, all we need to do is quite simple. What you need to do is say, okay, well, where's our macro swing high to swing low? Macro swing high, macro swing low. So what do? We draw on your Fibonacci from macro swing high all the way down to macro swing low. What does that give us? 618 to 786 box. Where are we at right now? The 618 to 786 box. Interacting with the Fibonacci's as we should, as we're supposed to. Confirming that we're interacting with our Fibonacci retracements levels, which confirms that likelihood is your topside ones are going to be important as well. Confirms that your topside ones are going to be important as well. And what are we going to do? Let me go ahead and make sure that this is perfect. There we go. I don't want to cause any shortcomings here. There we go. And so what does that mean again? It means that as we continue upwards, once we do inevitably, eventually, hopefully, right? I guess, hopefully, eventually, clear not only the 618, 786 box, kind of decisively, and we clear this all-time high, I believe that once we start to rally, we're going to see an interaction anywhere between 103,000 to 170,000. Now, you might say, well, Tyler Hill, that's a $70,000 difference. Obviously, that'll happen. But for the sake of the video, I have to give a range. Now, I'm not just going to give you a range. What I'm going to say, historically speaking, we reached the 1.618 box. Historically speaking. So historically speaking, my price prediction would be $170,000. When? Let's call it 2 to 4 years. I don't know. That's not the point of the video. Okay. When? Let's call it 2 to 4 years. Hopefully this bull market will be great, especially with all the ETFs and all that stuff, but who knows? But what I'm going to go ahead and say is that generally speaking, because the 1.272 is equally as important as a 1.618 box, that I'm going to find the middle point. I'm going to find the average between 102,000 and 170,000, and that roughly gives us $137,000. And what I'm going to say is that my price prediction based off of my Fibonacci thesis is that Bitcoin's price is going to run up to $137,900. Now, yes, is there a possibility that we're going to see it only hit the 1.272 level at $102,000 because of diminishing returns? Yeah, it's a possibility. But due to all of the macro environmental factors that are not judgeable based off of pure technical analysis, I'm not going to say that that's going to happen. I'm not going to say that that's going to happen because, again, because of all those fundamental reasons, we quite easily could go way past that. We could easily see one of the biggest bull markets in crypto we've ever seen before. So I'm going to say that based off of this thesis of the Fibonacci's, then my price prediction is $137,929. And if you roughly take that amount and you then gauge, okay, well, how much is $10,000? If one Bitcoin is $137,929, that means roughly you need 0.0725 or 7.25% of one Bitcoin for your position to be worth $10,000. Now, currently speaking, considering Bitcoin is at roughly, let's just call it $51,000 for the sake of this video, times 0.0725, that means roughly you're looking at about $3.6 to $3.7 thousand now to eventually be $10,000 once Bitcoin does reach this price prediction. And that is roughly, in terms of price growth, that means we're about, let's go ahead and do 100 divided by 36. That means that's roughly a 2.7x from here for Bitcoin to reach, of course, $137,929. So that's my thesis of why you need 7.25% of one Bitcoin in order to see a 5-figure portfolio based off of my thesis and price prediction for Bitcoin. Of course, I hope you guys do enjoy these little thought experiments. I hope you learned something from the Fibonacci's today. I hope you learned that you need to watch them closely, and there's a reason why I use them so much whenever I'm doing my technical analysis, because whenever you look at Bitcoin and say, holy crap, all of these interactions were exactly based off of the same two things, maybe it's important to look at it, okay? So I want you to see that. I hope you guys did learn something from that. I do have 2 things from you that I want you to know about because they are going to be great for you. The first thing is that, of course, the indicator that my company did recently design, HG Algo, we are running to an end of course, the 20% discount, of course, that we did start for the month of February. What you can see here is that we do have something called the DCA Plus feature, which gives you some of the absolute best times to be buying into Bitcoin, some of the absolute best times to be taking profit out of the market. It called the bottom perfectly. It called this low perfectly, this low perfectly. perfectly. These lows to the bottom side perfectly. Any of these purchases would have been amazing. It also works for the smaller time frames. If you want it to be a little bit, quicker, you can go down to the link in the description below. Go check out our website. There's a welcome video and a tutorial for you to watch to see if this is for you. And again, we are doing 20% off for life if you do go check it out before the end of February, which only has a week left. On top of that, if you are looking to trade some Bitcoin, I do have a Margex link down there for you as well. I made many videos about Margex here on the channel, but I do believe that they are the best platform to do your trading because, again, there's no KYC necessary, meaning you don't need to give them your personal information. You don't need to use a VPN from anywhere in the world. You can quite simply deposit and start trading on leverage with the sliding scale. Very easy, very simple to use. And again, you will get a couple $100s of a deposit bonus if you do use the link down there below. So, of course, I did have those two things for you. Always make sure that you check the descriptions below because I always get offers for you guys specifically when I do get sponsors. And so make sure that you, again, check that out. But with that in mind, of course, I hope you guys did enjoy today's video. If you did, please let me know, of course, always by smashing the like button and subscribing to the channel if you are new. And I will see you all next time. Peace out, everybody.